Hi, this is Joseph, and it is Thursday, basically Thursday evening rolling into Friday. Today is Friday, going to be non-farm payroll for October 2012. And in this video, I'm going to review some of the trades that we've had over the past couple of days and what has really been going on as far as the trading strategies and the techniques that I teach in the Learn Forex Trading in 30 Days ebook and video course. We're going to review just a few of the trades that I've taken with some of my students. So what we're looking at right now is the pound dollar. This is the 1 hour time frame. This particular setup that I'm going to show you is an advanced trading technique. I call it the T2 pattern. T, the letter T, and then the number 2. September 28th, this high back up here in the top left corner there, and then it sort of drops down. Here's Friday, and then we have Monday's price action, and it sort of goes sideways, and then we have that new consolidation range. We have that new low where this X is, this support level, and then we have this high right here. And then what we do is we notice that this candle right here spiked up, and it sort of printed that other trading strategy that I teach, which is called the continuation breakout trade. But in this case, it didn't have confirmation. You'll notice here with these indicators, this one here is the CCI indicator where I have my arrow. And you'll notice that there is clear divergence in the indicator. When you see that price right there, that price spike high, the CCI indicator is not following along there. It's clearly showing some divergence. And we sort of get the idea that this is probably going to roll over and probably go right back down inside of consolidation. That really is more or less that T2 pattern. So we've got a price swing high and then a low, and then it pulls back up, and then here's really where it sort of tops out on this pullback. So if you sort of imagine where, if you could follow my arrow here, we have this price swing here with a high, a low, and then a pullback, and then it sort of dips back down. Well, this is that T2 pattern. We have a high, a low, a pullback, again in price, with indicator divergence. And we get to enter here on a candle pattern. Now for this particular technique, I'm looking at the 1 hour time frame because I'm waiting for the potential of that continuation breakout trade to develop. It didn't line up correctly according to the rules there. So then I sort of look at the possibility of a reversal, and I go to the 30-minute time frame and look for a reversal candle pattern here, because this breakout to the upside is failing and it is starting to drop back down. So on the 30-minute time frame, we entered this trade and we earned approximately 50 pips all the way down here. Now the profit targets are usually the price swing low that created it. So here we have a price swing high and then a low, a pullback. Here's our entry, and then here's our target down here at this support level at approximately 6110, 6109 is approximately that support level. At that point, I'm done with the trade. I don't continue to chase it all the way down because I don't know where it's going to bottom, and I don't know when it's going to turn around and come right back up. It just looks like a trend for the day. So that was our first trade here on this reversal. I wanted to show you that that was the first T2 pattern, the first T2 setup. Now we also had another T2 setup which went in the opposite direction. So you'll notice here we had a price swing low, then that pullback here, and then a new low, and then with this new low that happened on the 3rd, October 3rd, which was yesterday, here's where it bottomed out, and again you can see that CCI divergence. So we were able to enter the trade here on this signal candle right here. This was our signal candle. We were able to earn approximately 50 to 60 pips as price comes back up to this resistance level once again. Notice how with this trade here, as we sold it, this was the support level, was our target. Well, in this case, if we're buying it back up and trading this T2 pattern back up, our profit target would be approximately that price swing high back up here above 6165, and that's approximately where we closed our trade, earning about 50 to 60 pips on this trade back up again. That's the T2 pattern. Now it's easy to identify it for day trading strategies or day trading time frame. That's your goal, but you can pinpoint your entry with a 30-minute time frame and then sometimes reduce the stop loss. If you go to the 30-minute time frame, you could have a stop loss of anywhere from 25 to 35 pips. It's not always going to be that way, but at times it will provide you that opportunity. Now looking forward into non-farm payroll, I really don't see anything other than the fact that here was a major price swing. The beginning of the week, or I'm sorry, last week's high, and then this price swing low here at the beginning of the week, and then everything is sort of moved sideways. But it has taken out the week's high here so far on this 1 hour time frame. So it is possible, at least at this moment. Now, non-farm payroll is many hours away. We still haven't even finished the Asian session yet, and the London session isn't set to begin for at least another 4 to 5 more hours. So there's still some more time here. It really anything can change, but at this moment, if price holds above this resistance level in here, it is possible that this is sort of a technical signal hinting or giving us an idea that price might jump up on the pound dollar with non-farm payroll, or at least through and leading up to non-farm payroll. So it is possible to trade the reaction of non-farm payroll or the results prior to non-farm payroll, which would be what the market sort of expects. So just keep that in mind, that if price holds above this resistance level here for the week, price could continue a lot higher. But I want to talk to you just for a moment about the continuation trade. Now, the continuation trade is one of the most reliable and one of the most profitable trades that I actually use. It's really more or less one of my favorite techniques, and I teach how to use this technique in the Learn Forex Trading in 30 Days ebook. Now, basically what the continuation trade does is it puts me in the path of a breakout. So we're sort of identifying consolidation ranges, and then it puts me in that path of that breakout and that trending move. And often when I'm using it for day trading strategies, I can usually earn on the Australian dollar or the euro dollar or on the pound dollar. I usually will earn about 50 to 60 pips, and it's usually a 1-to-1 reward to risk ratio. So we were looking at this double bottom here, which sort of printed a support level. This is the 1 hour time frame, by the way. So it printed a double bottom here on the 1 hour time frame for the Australian dollar, and then we wait. This is sort of a range of consolidation. It is a pretty big range of consolidation, but however, it is still there. That is a significant support level. And then we wait for a candle to close below support. So let me open this up a little bit. So now we can see price a little bit better. So here's that support level, and here is that signal candle. So the continuation trade, I'm looking for a couple of things. First of all, I need the Bollinger Bands to separate away from each other, showing me that sign of strength on this signal candle. And then of course I look at the CCI, make sure there's no divergence there, and I need a 3-pip entry. So I wait for the next candle, or whichever candle it is, whether it's 1 hour, 2 hour, 3 hour, 4 hours, for that to move lower than 3 pips, lower than the signal candle low. That low is approximately 308, and I used an entry of approximately 305. So I'm looking for approximately a 50 pip target or a 60 pip target. So I actually closed my trade at 50, and I'll show you where that level actually is here. So here is when price actually hit my target, which was the psychological level of 50. 1.0250. That was my target, and you'll notice that this pullback, all this pullback really did after I got into the trade, was just retested last week's support level. And that is a pretty common occurrence. So that was the continuation trade. So overall, with all of the trades that we've taken so far, and again, this is Thursday night going into Friday for non-farm payroll for tomorrow, we've earned over 450 pips using just a few different techniques and a couple of different HL30s, which I'll show you later on next week, a couple of HL30 trades, which is that consolidation trade. Good luck for non-farm payroll. Again, we really don't see anything too significant, but we do see certain currencies closing and holding above resistance. We just need to see if that's going to continue leading into non-farm payroll, which could then give us a potential hint or an idea of what to expect from non-farm payroll.